Welcome everyone to Vested Interest. This is Shane. Happy Halloween. It is the last day of the month, quickly wrapping up 2022. Hope it's been a great year for you and you have a very happy Halloween today. If you are celebrating, I have two daughters I'll be taking out trick-or-treating here shortly. I think around 5:30, 6 o'clock. So I want to wrap this up and get this one out to you. Today we're going to be looking at Medical Properties Trust. So let's jump right into the video. Medical Properties Trust. Who we are, the second largest non-governmental owner of hospitals in the world, experienced in unlocking the value of hospital real estate for growth, preferred by top operators around the globe. Here's their global portfolio mix. They obviously have a footprint in multiple countries, not just the United States, 62% of their portfolio, also the United Kingdom, 18%, Switzerland, 6%, 5% in Germany, 4% in Australia, 1% in Spain, 2% in other countries, and 2% in others. I don't know if that means, maybe out in space or other properties not considered medical properties. Not for sure what this other means, but 2% of other. And I did a video of Medical Properties Trust not too long ago where I covered the company, but one of the things I said I didn't like them was they were saturating their shareholders a little bit. Which basically means they were issuing new shares into the market, and I don't really like that. I like it whenever companies are either leaving their shares the same or actually buying back their shares. And here, Medical Properties Trust announces authorization of stock repurchase program 10/10/2022 at 10:16 a.m. EDT Medical Properties Trust Inc., the company, or MPT, ticker MPW, which is the ticker here, right? This is a REIT. Today announced that its board of directors has authorized a repurchase of up to 500 million of MPT's outstanding common stock before October 2023. So basically they will be, the one thing I didn't like about them was they were issuing more shares, but they will be turning that around and buying 500 million worth of their own shares back over the next year from now to October of 2023. So I like that they will be pulling shares out of the market, which basically means if you were to buy a share of them today and didn't do anything else, you would be a bigger owner of the company a year from now as they pull those shares out of the market. And if they're diluting you, which means adding shares to you, which a lot of companies do, a lot of companies people like actually do this. Companies like, what is it? I can't think of the name of it right now. It'll probably come to me in here in a minute, and I'll tell you. But a lot of companies issue more shares, and whenever they do that, it basically means you own less of the company as they put more shares out there. Tesla is one that did it for a lot of years. They may still be doing it. I'd have to go look at them. Palantir is the one that I was thinking of. Palantir does it significantly pretty much every year. I know a lot of people might like Palantir, but they are issuing more shares. So that basically means unless the share price goes up significantly, you own less of the company over time. And even if the share price goes up significantly, a lot of times that's offset by the shares they pump into the market. So just beware of that whenever you're looking at companies. You want them to have their share count remain the same or even to be buying shares back. So I like this development here, and this was the only thing I didn't like about them when I did that last video. If you want to know more about them, check them out at www.medicalpropertiestrust.com. That's where I pulled this information. I pulled this information from an article. And the reason we are taking a look at them today, Medical Properties Trust, ticker MPW, closed the day down 1.25%, $11.44 at the close of business of 10/31. 52-week range as low as $9.92, as high as 24.13. So definitely closer to this 52-week low than they are the 52-week high, although I would love it if they pulled back to this $9.90. Average volume of 13.4 million. Today's was 10.7, so less volume than overall, or their average anyway. Market cap of 6.855 billion, a beta of 0.89, less volatile than the overall market, even though there was a lot of volatility today. PE ratio of 5.72, earnings per share of $2 per share. Earnings date, the last one was October 27th. They have a forward dividend of $1.16 paid out in the year. They are a quarterly payer, so divide by 4 here. You'll see this later, what they pay out per share. And they have a very nice dividend yield, even beating the current inflation, which is extremely high. And their yield is 10.01%, at least here. Actually, when I was buying them, they were down in the $10 range, and it was 11. My yield on cost right now is 11%. Ex-dividend date, the next one is September 14th, so we just missed that. You have to wait for the next one, which would be, I would say, September, October, November, and December. right? 1 year target estimate, at least according to Yahoo Finance, where I pulled this information. Not affiliated with Yahoo Finance, just where I like to pull some information. They have a 1 year target estimate of $16.69 per share. Next up, we'll jump over to stockanalysis.com, another one I am not affiliated with, but I like to pull information from here. I like to pull from multiple sources just to make sure the information that I'm looking at is accurate, or as accurate as can be. And they have 19 stock analysts that have taken a look at this stock. They call it a consensus buy, at least according to these 19 analysts. They have a low estimate of $10.10, which would be an 11.71% decrease in stock price from where it currently sits. And again, I'd love it to go back down here. I'd probably add some more. Average estimate of $17.03, which would be a 48.86% increase in stock price. If it happened to hit their high of $21, that would be a 83.57%. If you bought them now, you would be collecting that 10% dividend yield while you waited for them to return back to this high. You can clearly see they were up here in the 23, 24, almost 24 range and have fallen significantly over the last year. Now we'll look at my position here. Again, Medical Properties Trust. I do have 200 shares now. At the beginning of the month, I started buying them. I sold out a store. I bought some there. I also sold out of another position. Stag was another one. So I bought 100 shares whenever I sold out of store. And I bought 100 shares whenever I sold out of Stag, and then diverted the rest amongst several other stocks. If you've watched my videos, you saw those sales, and you saw me pick these up right here. My cost basis is $10.36 per share. Right, I'm up 10.92%. Today they were down 1.21%. Again, I told you earlier they're a quarterly payer. Their payout ratio is 56.7%. Their dividend growth isn't spectacular, but with a 10% payout yield, I'll take this 3.6% growth on a 10% payout yield. If it's higher yield like that, I don't mind slower growth. And here is their last payment, 29 cents. So unless they raise this dividend here, this will be their next payout as well. And that is really it. Like I said, I got to get ready to get my daughters out to do some trick-or-treating tonight. Hopefully you have a happy Halloween. Be careful. Don't eat too much candy. And if you do, make sure you make that dentist appointment so you can get your teeth cleaned. And with that said, I always appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up. Ring the notification bell. Most importantly, subscribe to the channel. Join me on this journey to financial freedom. Hopefully you are on your own journey as well. Drop a comment down below. Let me know what you think of MP. Is it in your portfolio? Is it one you're watching? Is it one you're avoiding like the plague? I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics, or constructive criticism. Go ahead and put it all down below. This is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, we'll see you in the next one. Thanks for stopping by. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion. Investing journey for educational and entertainment purposes. Investing involves risk. You can lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice counsel of a certified financial advisor.